Good morning, trading family. Welcome back to the trading floor. Morning, market maniacs. Wildcard in the captain's chair, TB riding shotgun, and we are staring at a tape that just threw a peace party and woke up wondering if anyone called the cops. SPY ripped 1.5% yesterday on Iran, requesting Doha talks. 24 hours earlier, they were bombing Bahrain and Kuwait. That is not a pivot. That is a 180. But while paper oil is sitting at $70, Pakistan is buying emergency LNG because Qatar's flow is still jacked. Physical market and paper market are not telling the same story. That gap is where we live today. TB, futures got any edge, or are we just floating?
Futures are basically flat. SPY hanging near yesterday's high, NASDAQ futures up a few ticks, VIX in the mid-teens. The dollar index ticked up 0.3. Yen still soft. The real tension is sitting in the 10-year yield at 4.4%, waiting for JOLTS at 10. Quick reminder, nothing we're about to say is financial advice. We're two traders talking markets, not telling you what to do. Do your own research, make your own calls.
Respect. All right, top stories. I got three that matter right now. The oil disconnect between paper and physical. The JOLTS number that either validates this rally or pours cold water on it. And the tech divergence nobody's talking about. TB. Let's start with the Doha whiplash. I can't get past the Pakistan LNG purchase. A nation of 240 million people is paying emergency freight because the Strait of Hormuz is not open for business. Morgan Stanley puts out a glut call, assuming Hormuz goes back to normal overnight. That's a bet, not a forecast.
And requested is doing a lot of work. Iran hasn't confirmed the talks. The market priced the piece as if the talks are already done. The timeline is the tell 48 hours from bombing to requesting talks doesn't smell like resolution. Clean de-escalations take weeks of back channels. This feels like a pause button got hit, not a ceasefire.
The pattern is the pattern. Iran gets paid, stalls, escalates. Since February, they've extracted concessions every time. The MOU gave them $300 billion and Hezbollah protection for a 2-week pause. If that's the playbook again, oil at 70 is a mirage. I'll put the odds of talks holding to the weekend at maybe 30%, and I'm being generous.
I'm at 30% too. Pakistan scrambling for gas is a physical confirmation that the choke point is still compromised. If Doha doesn't produce a concrete straight reopening timeline, oil at 70 was the low. The market already front-ran the piece. If talks wobble, that SPY gap gives back fast. The real move is down.
And that ties straight into JOLTS, which is the second piece. Yesterday, the market priced two separate bets at once, a soft landing and a geopolitical peace dividend. JOLTS at 10 is the first reality check. Consensus is 7.28 million. Prior, 7.618 million. If job openings come in above 7.7 million, rate hike chatter gets loud. A former Fed official already said, talk about raising rates. Bundesbank's Nagel says inflation stays above target. Spanish inflation is still hot. That's a hawkish cocktail. Bonds sell off. The rally cracks.
Right. Above 7.7 million means the labor market is not softening. The Fed's window for cuts shrinks further, and the peace plus pause trade can't survive that. Below 7.1 million, we keep the soft landing narrative, and the rally has room to breathe. The middle ground is noise that gets brushed off by lunch. My wave trader algo stayed very conservative yesterday. Screened 318 names, only 5 passed. That tells me the machine was already pricing tightness before the data confirms it. If JOLTS is hot, the system was right to be defensive.
That scan stat is hard to ignore. Your wave trader algo basically said there are almost no clean entries. My TFT algo entered 2 names yesterday, BWXT at 194 and AMD at 532. But those weren't macro calls. They were pure momentum entries. The system doesn't trade headlines. It trades price. Meanwhile, my gut call account is all cash. I am not buying this piece headline until the talks hold through the weekend and JOLTS doesn't bite.
My gut book is holding only BYD, and I'm not adding either. This morning is a wait and see. The third story, the tech divergence, is where I'm living the pain. Qs ripped 2.5% yesterday, but the S&P tech sector, the tech sector, is down 3.51% on the week. The difference between big tech and semis is widening into a canyon. My wave trader algo is sitting in Marvel down 10% from entry, Form down 7.5%. It added Micron yesterday, and now that name has a lawsuit overhang. Semis are the demand signal. If they're sick while Apple and Google rip, the rally is narrowing. Narrow markets have sharp reversals.
That's the chart nobody's looking at. Everyone sees the Q screen and thinks it's a broad tech rally. Under the hood, it's a handful of mega caps. I got Broadcom bleeding in my TFT algo, Marvel, and Form underwater in yours. And the sector index, the tech sector, getting smoked on the week. If semis don't catch up soon, this whole artificial intelligence trade starts looking tired. The question is this just a pause or the first crack?
Living P&L says it's more than a pause. When the hardware names that power the actual build-out are lagging while the software platforms rip, you have to ask whether the capex is priced in and the margins aren't following. The Micron lawsuit is adding headline risk on top of that. I'm watching the Philadelphia Semiconductor Index, ticker SOX. It needs to reclaim the 50-day moving average or we're in trouble.
All right, let's shift gears. After the bell tonight, we've got Nike and Constellation Brands. This is a consumer pulse check. Nike consensus is 11 cents, an extremely low bar. If they clear and guide up, that's a consumer strength signal right when the macro is noisy. If they miss, it's a crack in the spending story.
Constellation Brands consensus $3.22. The Modelo momentum has been a stealth winner, but a miss says something about the down market consumer shift. Both prints matter. No calling them ahead of time, but they set the tone for the rest of the week. If Nike surprises, my gut book might get interested tomorrow.
And the economic calendar this week is chunky. Today, we've got Eurozone consumer confidence, expected unchanged at negative 17.7. ECB President Lagarde speaks. Any shift on rate cuts moves the currency market. Japan's unemployment rate steady at 2.5%. Then the big one, United States JOLTS at 10, and Chubb consumer confidence at 10. Consensus 94.4, up from 93.1. Tomorrow, Wednesday, we get UK GDP expected to pop to 0.6%, German retail sales, and a full basket of German state CPIs. Then the national German CPI, consensus 0% month over month, and 2.6% year over year. A hot German print would amplify the Bundesbank hawkishness Nagel already telegraphed. Strong JOLTS plus hot German CPI equals rates, paying back on. Cool JOLTS plus inline CPI equals soft landing world intact.
Clean. Sector rotation. 1 week leaders are XLV Healthcare up 7.12%, XLU Utilities up 2.91%, XLP Consumer Staples up 2.6%. Classic defensive bids still churning under the surface. Laggards, the energy sector ETF Energy down 0.89%, XLB Materials down 1.86%, and the tech sector, technology down 3.51% despite yesterday's Q's rip. Money is still rotating into safety even as the headline tech names pop. That disconnect is the same story. The rally is not broad, it's fragile.
International. Asia was mostly green overnight. Nikkei up 0.86%. Shanghai up 1.67% on local stimulus chatter. Kospi up 0.97%. Hang Seng down 0.63%. Profit taking after the tech run. Europe. DAX up 0.82%. Euro. Stocks 50 up 0.6%. FTSE 100 up 0.3%. They're cautiously positive ahead of Lagarde and German CPI. FX side. USD, JPY up 0.3%. Dollar index up 0.3%. No carry trade alarm bells yet, but a hawkish JOLTS could send USD JPY streaming higher and trigger a mini unwind. The peace bid is a global macro trade. If Doha wobbles, everything risk on. Japanese exporters, United States tech gets repriced.
And that brings us to the portfolio. Hot news, false piece, cash is a position. Wildcard, you are all cash in your gut book, and your TFT algo is running a mixed 7-name book. Walk through that.
My TFT algo entered BWXT at 194 and AMD at 532 yesterday. Existing holdings, ASML is cooking, Broadcom is bleeding, Marvel and Form we already flagged are hurting. That's the kind of book that tells you the system is selectively aggressive but taking some heat. In my gut call account, all cash. Not buying this rally. The oil disconnect, the JOLTS unknown, the narrowing tech trade. I'll say, wait, cash is a position, patience is a strategy. TB, your Wave Trader algo and gut book?
Wave Trader algo screened 3 OT names, only 5 passed. It added Micron, now dealing with a lawsuit overhang, and DDOG. It's holding Marvel and Form underwater, so the algo is being very conservative. My gut book is holding a small position in BYD, and I'm not adding anything today. No callouts from either of us. The only thing that could change that is a JOLTS extreme or an after-hours Nike surprise. We'll be ready for Wednesday if the setup firms.
Here's what we're watching tomorrow. First, Nike earnings after the close tonight. The consumer story gets told. Second, JOLTS fallout. If the number surprises, the narrative shifts fast. Third, Doha follow-up. If Iran doesn't confirm or the talks look shaky, oil rips back, SPY gives back, concrete levels, SPY watch 740 support, 748 resistance. Nvidia needs to reclaim 120. Marvel holds 70, or it could flush. TB. Anything else?
That's the list. We'll see you tomorrow.
Lock it in, protect your neck, and trade like you mean it. We out.